Listen to me. You see this pair, XAUUSD, popularly known as gold USD. Now who don't know gold, go see and call them copper. This pair that you see here, XAUUSD, has sent so many people to their village, including you watching it right now. You will agree with me that so many people that call Forex a scam now because of gold.
Sorry.
So in this video, I'm going to be breaking down why you should not trade gold as a beginner trader and how you should be trading it and what other pair you should be trading instead of gold. Stay with me to the end. I think I need to break what gold really is to you guys in case you probably do not know. Gold is a metal instrument that is being traded amongst other currency pairs popular among forex traders. Why new beginners like to trade gold is because it is very volatile. What that means is anytime you move in their favor, tiny amount of people, if they wait about 1 minute, they can make a lot of money too with their small account. And the same way you make more money in forex trading is also the same way you can also lose as much money. Beginners with their beginner luck, whenever they place their trade, maybe they use 0.01 and they are sitting in 15 minutes, they're already making up about $50. $50 in Naira right now is a lot of money, around 70,000 Naira or 60,000 Naira. Then that is a lot of money for them. They don't want to learn, they don't want to improve, they don't want to check other things, but they feel relaxed trading it. So most beginners love to start out with gold. Another reason is because of the testimonials they must have seen other traders display on Instagram, on YouTube, on Telegram, on WhatsApp. Oh, look at how much I made. Then you just check the screenshots. Look at how much this guy made. He made about $10,000 trading this particular XAUUSD. Then they go on their MT4 or MT5, they search it out, they start doing the same thing without finding out the exact thing. Now let me tell you the truth. Metals are very volatile. Volatility happens in most pairs that are less traded. For example, if you check exotic pairs are pairs that are less traded, like USD ZAR, that's USD South African rands, USD Naira, USD Mexican pesos, USD, a lot of other things, NOK, USD, other countries' currencies that are not so popular. Those are exotic pairs. If you check them out, you notice that they are very, very volatile. They are very wicked. If you put any small amount there, if you put against your account to be blown. So gold is just like that. But gold is not in the exotic category, but it's not in the mental category. It is not much people that trade gold as much as they trade Euro USD and GBP USD. So that's why you notice that on Euro USD, you can wait for a couple of more hours or maybe market move a long candle. You're not making as much money you'll be making as about the same candle length that you'll be making on gold. That is the reason. Volatility in these two pairs are different. Now, let me tell you why exactly you are losing back to back on gold. Let me shed more light regarding volatility so that you know why you make more money when you trade gold and why you make less amount of money when you trade other popular traded currency pairs. So I sent a signal on my Telegram channel on this very day. So this signal was sent on the 25th of June. About the same time, I sent buy on GBP USD because I saw that signal, and I also sent buy on XAUUSD almost about the same time, right? So the two of them went in profit. Here's the example of the two of them. These are the two trades later on, all right? So you can see this amount of time. If you check the numbers of candles, so from this point where I called the trade, the market immediately went into profit. Then this trade, we were able to target 1,138. So that's 1,138, or you can say 113 pips that it caught in about this amount of time. But check on GBP USD about the same time and the same amount of waiting period. See a lot of candles, but then the maximum it did give was about 31 pips. A forex trader who placed one standard lot size on this trade on gold would have made $1,000, whereas someone who placed one standard lot size on GBP USD would have made just $338. About the same waiting period of time. You see, but then what if it had whipsaw? What if it had gone to the other side? That's how you would have also lost the same amount you made, opposite ways. So that's why people are actually really drawn, because of the fast profit that it brings. The volatility is there and they want to catch big amount of money in time. Most of the people that trade gold are newbies or people that have small amount of money because they want to be able to flip their $10 to $1,000, $20 to $2,000, $30 to $3,000. They want to do crazy flips and then come online and show. And then those are the people that market keep taking their money. At the end of the day, they start telling their people that Forex is a scam. That is the exact reason and the purpose for making this video. What exactly should you be doing instead of trading gold, instead of finding volatility, a pair that's going to take your money that you've not really studied because you have seen people showing off profits? What you should be doing first is Learn with pairs that are majorly traded. Example of highly traded pair, there are about 7 major currency pairs, but the ones you should be sticking to should be GBP USD, Euro USD, USD JPY, USD Canadian dollar. We have USD CHF and AUD USD, NZD USD. Any among these ones, you should start with these ones. So if you have learned and mastered the volatility of how they all move, then you can start transitioning to trading maybe a more volatile pair like gold. But however, I know some of you, we have coconut head, you still want to trade gold. Don't worry, this is what you should be doing. So if you are head bent on trading gold because you feel gold, you are just comfortable with trading gold, make sure you use low lot size. If you have an account balance of $500 down to like $1, you must make sure you are using 0.01 on your account per time. Because when gold moves, it is faster than any other currency pair that you are trading out there. Your 0.01, when it moves in your favor about 1 pip, sometimes it can be giving you more money than GBP USD will give you when it moves about 5 pip. So you don't want to be comparing the movement that GBP USD moves for you when it makes 5 pip to one pip movement on gold. They are two different things. Gold is more volatile and GBP USD is less volatile than gold. Like GBP USD is also more volatile than Euro USD. So if I'm to ask you to choose as a beginner while starting out, I'll say you stick to GBP USD or Euro USD while starting out. Gold should be mostly traded during London session, New York sessions. So why these sessions? Because these are the times that market is really very active. There are a lot of people that are already anticipating the London session, the New York sessions. I mean, you should want to join them. You shouldn't be trading them in a session where they are redundant, it's not really moving so well and all of that. But then I understand some people are swing traders. If you are swing traders, you can place your trade now. Swing traders are traders that place their trade right now and wait for a couple of days for trade to get into profit for them to close. Whereas day traders are people that place trades and they make sure they close that trade before that session ends or before the day runs out for them. So if you are a swing trader, you can allow your trade to run for a couple of days, that's fine. But make sure that you put enough stop loss that the market or the structures at that particular time would respect. And also, whilst you are putting stop loss, enough stop loss, also make sure that that stop loss you are putting, that you will not get liquidated before the stop loss even get hit. Some people, sometimes they place trade, they put stop loss, they don't know that that stop loss that they put is actually the whole of their account that they are risking. That's why we have invented position size calculator in FirePip to help you to calculate your risk before you hop on any trade. So this position size calculator, you're going to put your account balance, put in the percentage that you're supposed to risk, put in the stop loss that the market, based on your market structure or your strategy, has given to you, and then you put in the bid price or the ask price of the base currency of whatsoever you want to trade. Or sometimes the calculator just does it for you. You don't have to put the bid or ask price of the particular currency. Click on calculate is to recommend for you the actual lot size you're supposed to be using for your account balance, and it's going to tell you the amount that will be at risk. So for example, if you have put gold and you put all these parameters, maybe you put an account of $1,000, then if you withdraw against you, tell you you're supposed to be losing $50 for this lot size you have to use. So if you're comfortable with doing that, that's when you go ahead on your MT5 when you're trading terminal, and then you click on it. So make sure you always do your position size calculator before heading in any trade. As a beginner, you have to make sure that every of your box is well ticked, and make sure that you are learning from the right academy. FirePip Forex Academy, my academy, teach people how to trade profitably. All right, so guys, I would love to see you guys trade profitably, avoid the wrong pairs, and stick to the right things. All right, see you guys some other time, and bye for now, guys.